Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing my European opening market comment for Wednesday, August 3rd. The dollar and euro were weaker overnight as the yen and sterling gained. The yen gained yesterday after the Japanese government shocked the market by coming out with a supplementary budget that was way smaller than expected. That means less fiscal stimulus and continued deflation. The currency peaked in early New York time, but has managed to hold on to most of its gains. At the same time, note that Japanese government bond yields are rising sharply. 10-year yields are now minus 8 basis points, whereas just a week ago, they were at a record low of minus 29 basis points. Now, what the combination of a rising yen and rising JGB yield says to me is that investors are doubting whether the monetary policy can work anymore. That may explain why sterling is stronger today, too. People see that Japan, for all its struggle for years, is still stuck where it is, and they notice, too, that the Bank of Japan seems to be about to give up on its extraordinary monetary policy, as I've written about. Then, obviously, they're going to question how effective any moves by the Bank of England this Thursday might be in reviving the UK economy or in weakening the pound, for that matter. The other key point in the markets today is that oil, or at least West Texas Intermediate, WTI, the U.S. benchmark, fell decisively below $40 a barrel. The fall was stopped after the weekly statistics from the American Petroleum Institute, the API, showed a decline in both crude and gasoline inventories. As for today's data, we get the final PMIs and the ISM indices for July, the U.S. ADP report on employment growth, and the official weekly U.S. inventory data. Most of the action will be in the U.S. time zone, as the European indicators aren't that market affecting. The final version of the European service sector and composite PMIs probably aren't going to be of much interest. Over the last 3 years, the final version of the Eurozone service sector PMI hasn't been revised at all from the initial version. The same goes for the UK service sector PMI. That means, though, that if the UK service sector PMI is revised, the news would be just that much more shocking for everyone. The UK manufacturing PMI was revised down sharply on Monday. That news clobbered sterling then. For an update on the U.S. indicators coming out today, please watch my North American opening market comment. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.